don't invest in anything till it hits you like a 2x4 on your head, and it's blindingly obvious. Do not invest in something which requires a 14-page thesis to explain why things are going to go your way. Invest in something that requires 4 sentences.
Hi everyone, JJ here. Welcome. Well, today we're going to look at a chat between investors Guy Spier and Mohnish Pabrai, a chat they had a few years ago at Mohnish's offices in Irvine, California. You'll notice that Mohnish doesn't have a moustache in this one, so it was a few years ago. It's interesting to see their investing philosophy back then and what they're talking about. I'm going to pick out some key points and give my comments on it. So let's get straight into it.
Why is it that some of the people that we observe who are so smart, smarter than I am, and possibly even smarter than Mohnish Pabrai is, do things like bet against, let's say, a fixed exchange rate in Asia, or continue to short stocks?
Well, I think in many cases, like Warren says, that if you were to give up 50 IQ points, you would actually do better.
Yeah.
So I think egos get in the way. I think too much intellectual horsepower gets in the way. I think Buffett's approach, which is don't invest in anything till it hits you like a 2x4 on your head, and it's blindingly obvious.
Oh, sorry.
Do not invest in something which requires a 14-page thesis to explain why things are going to go your way. Invest in something that requires 4 sentences.
He says this quite a lot in different ways, and this video is going back a ways. He says here, it really needs to hit you by a 2x4, that's a piece of wood, hitting you over the head. Give it a pass if it's too complicated, and I do agree with this. One of Mohnish Pabrai's commandments is thou shalt not use Excel. We see many people using really complicated things in Excel, lots of spreadsheets to work out things. And he's not saying here that you shouldn't work things out thoroughly. He's just saying that in the end, the thesis has to be simple. It has to hit you over the head. They don't come along very often, but you have to look for them, and the thesis has to be really simple when it comes down to it. If it's not 4 sentences, it's too complicated, and give it a pass. Put it in the too hard basket, as Charlie Munger and Warren Buffett said.
There'll be the question, what is your process? And it just seems to me that those insights, those aha, eureka moments, come when there isn't any process. And actually, you said something to me very early on when we met that, and I don't think that's the case with me in all of them, but you have these aha moments, you don't know when you're going to get them, and suddenly you realize you're onto something. That happened with the automobile business, but if someone was to ask you, what exactly did you do, how did that happen, I don't think that there's any answer that Mohnish can give. It's probably different. Every aha moment happens.
Well, but I would say the following, as I have mentioned several times. I'm a shameless cloner, right?
So you say you're a shameless cloner.
Yeah. So let me just kind of crystallize my thought a little bit on that front. So the thing is, this process of getting insights. I think Warren and Charlie, they're light years smarter than I'll ever be.
Yeah.
And so I take a low life shortcut, you can say. And so the low life shortcut is I looked at, for example, and I continue to look at what great investors are doing.
There's an interesting point as well where Guy Spier talks about the process not being the same every time. And Mohnish has talked about this quite a lot too, that ideas can come from different places. He talks about shameless cloning here, looking at what other investors are doing, but they can come from different places. But he said you have to look around, always be reading, always be researching, and an idea will come along and hit you over the head eventually. And one of the main places he looks, and I do this too, we look at 13F filings. A lot of investors do that. Perhaps you do that too. I've made lots of videos about it. Every quarter, the 13F filings come out from great investors, from some of the best investors in the world, to see what they're doing, and not necessarily just to copy what they're doing, but to see what they're investing in and then reverse engineer what they're doing. Why are they investing in that? And it might lead somewhere else, but it might lead down the path to that stock. It's about narrowing down the number of ideas, because there are tens of thousands of stocks in the world, tens of thousands of companies, public companies. How do you narrow it down to just a few that you actually want to buy? Maybe less than 10. And this is a good place to look, looking at what other smart people are doing, what other great investors are doing, and then go from there. Now, if you're getting value out of this episode so far, I'd really appreciate it if you remember to hit that like button to help the algorithm to spread it to more people, because that's what we want. Thanks.
For me, what has usually worked is something somewhere has given me a seed, and usually it'll be, looking at what the great investors are doing and then trying to understand why they're doing it.
He talks about getting a seed of an idea from other investors there. They went into the auto industry, really didn't like it, but he found something that he did like. What he didn't say here is he found Ferrari here, which eventually was a spin-off, and both he and Guy Spier here made money from that. Guy Spier still owns Ferrari as a stock. Mohnish Pabrai sold it. He said he regretted it. He should have held it a bit longer, but he still did well out of it. So it was the seed of an idea followed through, and that's what happens when we look at 13Fs from other great investors and try and work out why they did. Sometimes we just can't work it out. I've done that. It's been in the too hard basket because I haven't worked out, or I don't understand the industry, not in my circle of competence, and so I didn't go near it. But you still learn from doing it. I think you still learn from doing the research. Even if it takes you nowhere, you still learn things just reading and researching all the time.
Your playing bridge has improved your ability to stay away from highly valued sensible investment, or sensible, there we go, that's a wonderful Freudian slip, and go into the things where nobody's looking, because in bridge it's not the quality of your hand, it's what you bid and how you play the hand. And so you have this orientation that is, you can have a really bad hand and play it well and do really well, and that would be the same as buying into a horrible looking business, but if you play it well, you can end up with very high returns.
I haven't played bridge before, but I understand that it's a game of probabilities. Mohnish Pabrai's talked about this as bridge. He also plays blackjack, which apparently got banned from a casino for winning too much in blackjack, having a system. They understood that he had a system, and then they kicked him out. He wanted a certificate, it's kind of a graduation certificate, but they wouldn't give him one. But bridge is about probabilities. That's what Guy Spier is talking about there, and referring it to investing. Of course, Charlie Munger played bridge as well, and also Warren Buffett plays bridge.
What I've learned to appreciate is, I think the Holy Grail is to identify hidden moats, not so much cheap assets.
Yeah.
I think because if you found a 40-cent dollar, and at some point it gets valued at $1, so fine, you'll double your money in some period of time. But if you found a Chipotle,
yeah, when
it was in 3 states, for example, and you had a sense that there were high probabilities that this would appeal to a much wider group of people, for example.
This is obviously a few years ago, but we can see the change here from buying fair companies at a wonderful price, which is traditional kind of value investing, Ben Graham investing, to buying compounders, long-term compounders. And also referring to smaller caps. If you could buy Chipotle when it was only in 3 states, a smaller company, and seeing the future of that, or predicting the future of that, the probability that that was going to grow, and letting it run as a long-term compounder. Since this talk a few years ago, that's exactly what he has been doing. He's been going around the world looking for not just undervalued stocks, but long-term compounders. He's talked about Thesis in Turkey recently. That's been very good for him, a very small cap in an undervalued market. So both of those things, a compounder and undervalued. Now, if you don't know yet, I've started the Art of Value Patreon community. I'm sharing exclusive videos and content over there just for the price of a cup of coffee each month. Give my thoughts on stocks that I own, stocks I'm researching, the stock market, and investing in general, many things. So I'll put a link in the description there if you want to go and check that out, and hopefully see you over there.
But something that happens a lot is that people will talk about what they believe is a hidden moat. So it'll become sort of common knowledge that XYZ company has a great moat that nobody understands, and it's a high valuation, and there's a whole dynamic there. And I think that for me, those ideas can shout so loud that it's hard to get away from them. And I'm thinking, right now, Bitcoin, not that it has a moat, but everybody wants to talk about Bitcoin, or there wasn't long ago that everybody wanted to talk about Netflix, or I guess those are well known, but to really understand the subtleties that this really is a hidden moat and to be comfortable with that.
Well, one thing you've done well is you've identified clearly visible moats and then gone hunting around the world for clones of that, which maybe were not appreciated by investors. So kind of like look at Moody's and say, what are the other credit rating agencies around the world? Because they all have the same dynamics in terms of, the duopolies and pricing power.
I think what Pabrai is referring to there is a similar company to Moody's in India that they were both looking at. But what Guy Spier is talking about here is looking at companies that are building a moat, so the moat widening. He also mentions that if everybody knows about the moat, then it's usually expensive and then maybe it's not worth investing in it, or it's too high of a price. But then again, what is too high of a price? If a company's doing well, if it's kind of a monopoly, then it's probably going to do well, even though the price is a little bit high. A wonderful company at a fair price. You can think about Constellation Software here, which is usually pretty expensive, but it's just kept on growing and growing and growing because there's an incredible capital allocator at the helm there driving that on.
The way I introduced your office was that I said, and I only realized it now, Mohnish, I was thinking if I was to move here and I saw some office parks and I saw XYZ financial factoring company, in Kiewit Plaza, they're all constructing things, and there's Berkshire Hathaway sitting in the middle of that, allocating capital. And here in this park, you have a yoga studio and you have some college preparation companies all teaching kids how to prepare for the SAT, and then you have Mohnish allocating capital in the middle of something that is completely non-financial. And I'm convinced that that makes a big difference. I would argue that if you had your office somewhere in an office tower in New York with a bunch of hedge funds around, you'd be thinking up all sorts of crazy things to do, and you would have done many of them, actually.
Right. Well, let me put it this way, Guy. I'm not looking to move.
I think that's a great point and especially valuable for value investing. Mohnish Pabrai did move, eventually moved to Austin, but he has said in recent interviews he mostly works from home. They've got an office there, but he hardly spends much time there at all. But he's nowhere near New York, near Wall Street, and Guy Spier lives in Switzerland, way away from financial centers. We've heard many stories of this for value investors who don't like to be in the heart of financial things. There's sort of room to think, room to breathe, and not so much noise around. Nick Sleep was known for having an office kind of in London outside of the financial center, above a shop, I think it was. And they just go and sit there in their armchairs and read. And John Templeton was known many years ago to leave New York and go to the Bahamas and invest from there. This was the days before the internet, and he got the Wall Street Journal and reports sent to him. So it was quite a way later before he got the news, and his investing improved after he did that, after he moved away. And this is close to my heart because I live in New Zealand. If we look at a map, I'm about as far as you can get from Wall Street, from New York and the financial centers. I am in the biggest city in New Zealand, but I'm kind of on the edge of it, near a forest. And we know we get so much noise these days with internet, but that does allow access to data as if I was in anywhere else as well. It's just good to be away from the financial noise, and I don't look at much financial mainstream media, all that, daily price noise. Warren Buffett's the famous one of living in Omaha, so far away from Wall Street. I'd love to know what you think about what Guy Spier and Mohnish Pabrai have said here. Is there anything that they said that you think that you could apply to your investing to do more of or do less of? Let me know in the comments. Now, if you're watching this on YouTube, I'm going to put a link here to a video that YouTube thinks that you in particular should watch next. So go and see that now. And thanks to everyone for watching or listening, and I'll see you in the next one.